State regulation of producers. Regulation of insurance producers. Sex. 10 to 128.1, 22 to 103, 27 to 216, 405, Comar Sex. 31.03.02.06, March 31, 2003, 31.03.13.05, 31.15.02.12, 31.15.02.18a, 31.15.02.02, 31.15.02.03b. Retention of records. The Commissioner is authorized to establish by regulation how long an independent insurance producer will keep his or her records related to insurance transactions and how they will be maintained. An insurance producer will maintain insurance records usually for at least 3 years, which is the general statute of limitations in Maryland. Written documentation of an appointment from an insurer while the appointment is in effect and for at least 5 years after termination of the appointment, and certificates of continuing education course completion for 4 years following the date that the course was completed. Activities of unlicensed individuals. It is a fraudulent insurance act for an individual to represent to the public that he or she is an insurance producer in Maryland if the individual is not appropriately licensed. It is a fraudulent insurance act for an insurance producer to solicit or take an application for insurance or place for others insurance for which the insurance producer has not obtained an appropriate license. Pay a commission, fee, or other consideration to a person for selling, soliciting, or negotiating an insurance contract if the person does not have a license to transact insurance. Accept a commission, fee, or other consideration for selling, soliciting, or negotiating insurance if not appropriately licensed to transact insurance, and fail intentionally to report to an insurer the exact amount of consideration charged as a premium for an insurance contract, if different from the policy premium, and to fail to maintain records that show that information. Payment and sharing of commissions. An insurance producer cannot pay a commission, fee, or other consideration to a person for selling, soliciting, or negotiating an insurance contract in Maryland if the person does not have a license to transact insurance. Commission earned on the renewal of a policy can be paid to a person for selling, soliciting, or negotiating the policy if the person was licensed to transact insurance at the time of the sale, solicitation, or negotiation of the policy. Charging of fees. A person may not willfully collect a premium or charge for insurance if the insurance is not then provided, or is not to be provided in due course subject to acceptance of the risk by the insurer, in a policy issued by an insurer. A person may not willfully collect a premium or charge for insurance that exceeds or is less than the premium or charge applicable to that insurance under the classifications and rates approved by the Commissioner. An insurer or producer may pay a fee to an unlicensed person for making a referral for insurance. The unlicensed person receiving the referral fee may not act as a producer by soliciting, negotiating, or selling insurance and may in no way represent to the public that he or she is a licensed producer. Fiduciary capacity. Insurance producers must act in a fiduciary capacity when collecting premiums or other funds. They cannot commingle an insurer's funds with their own funds or with other funds they hold. However, producers are not required to maintain a separate bank account for each insurer's funds, as long as the identity of the funds can be easily determined from the producer's books and records. Responsibility for trust accounts. Trust money refers to a deposit, payment, or other money that a person entrusts to a title insurer or its agent to hold for the benefit of a buyer in a real estate transaction in connection with an escrow, settlement, closing, or title indemnification. A title insurer or its agent may commingle trust money received from clients, if in the judgment of the title insurer or its agent, a separate deposit of the trust money would generate interest in an amount not greater than $50 or the cost of administering a separate account. Other trust money in the possession of a title insurer or its agent may be deposited in any other deposit or investment arrangement acceptable to the client and the title insurer or its agent. Commingling of funds. Insurance producers in Maryland must hold premium monies separate from other funds unless they have the written consent of the insurance producer's principals to mingle premium monies with the insurance producer's personal funds. Insurance producers who do not promptly remit funds to principals must deposit them in one or more appropriately identified bank accounts in Maryland, which are known as premium accounts. Withdrawals from a premium account may be made for only the following purposes: payment of premiums to principals, transfer of bank interest to an operating account with the written consent of the principals, transfer of actual or average commissions to an operating account, withdrawal of voluntary deposits, payment of return deposits, payment of return premiums in the ordinary course of business when a written agreement with the principal authorizes this practice. Advertisements. An advertisement for an insurer must clearly identify the insurer's true identity. An advertisement may not use a trade name, service mark, slogan, or symbol that may mislead or deceive the public as to the insurer's true identity. Advertisements must be truthful and may not mislead the reader. Words or phrases may not be used if their meaning is clear only by implication or by familiarity with insurance terminology. Exceptions, reductions, and limitations affecting the basic provisions of an insurance policy must be disclosed in the advertisement if the advertisement refers to any dollar amount, the period of time for which any benefit is payable, the cost of the policy, a specific policy benefit, the loss for which a benefit is payable. Every insurer must keep in its home or principal office a file that contains every advertisement used to market its individual and group insurance policies, with information concerning how and to what extent the ad was distributed. This file is subject to examination by the administration. The insurer must maintain this file for at least 3 years. For your review, insurance producers maintain records on insurance transactions, documentation of appointments, and certificates of continuing education completion. It is a fraudulent insurance act for an individual to represent to the public that he or she is an insurance producer in Maryland if the individual is not appropriately licensed. An insurance producer cannot pay a commission, fee, or other consideration to a person for selling, soliciting, or negotiating an insurance contract in Maryland if the person does not have a license to transact insurance. Insurance producers must act in a fiduciary capacity when collecting premiums or other funds. Insurance producers in Maryland must hold premium monies separate from other funds unless they have written consent to commingle with other funds. An advertisement for an insurer must clearly identify the insurer's true identity and must not mislead or deceive the viewer in any way. An insurer must maintain a file of all its advertisements for at least 3 years.
Okay, so here is the quiz for this lesson. ABC digitally maintains files of advertisements and used to market its health insurance policies. How long is it required? I say 3 years. Alex sold an insurance policy before his license lapsed and earned a commission on the sale. Which of the following is true regarding his commission if the policy is renewed? He cannot receive a commission. He can receive a commission. He cannot receive a commission because only one commission can be paid. He can receive a commission because he was licensed when the policy was sold. Interesting. Can he receive a commission because he's no longer licensed? I'm going to go with this one, but I'm not sure. It could be this one. When holding insurance premiums and other funds, agents must act in what role? Fiduciary capacity, I'm guessing. Insurance producers who do not promptly remit funds to principals must deposit the funds in a trust account. 50%. Which ones did I get wrong? Okay, this one here. He cannot receive a commission because he is no longer licensed. Okay, that is not right. He can receive a commission because he was licensed when the policy was sold. Okay, good. That's good to know. I wasn't sure about that one. Alright, I got that one right. This one's wrong. It's a premium account is where they deposit the funds. Insurance producers. This is kind of like being a real estate agent. But in a real estate agent, it's a trust account. For here, it's a premium account. And, of course, this one is 3 years because almost everything here was 3 years. For records, it's 3 years. For files on anything, it's 3 years. And he can receive a commission because he was licensed when the policy was sold, which is nice. That's sweet. Okay, so you can still make money even if you are not no longer licensed. How about that for passive income? All right, I'll see everybody on the next video.